Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 energy stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. Today we use the TipRanks stock screener to search for stocks in the energy sector that come in with all buy ratings from Wall Street Analysts. So today we're going to take a quick look at these stocks, what it is that the companies do, and what those analysts are predicting for the stock's future. You can follow along over on the TipRanks website or by downloading the TipRanks mobile app using the link in the description down below. Now let's jump right into these 3 strong buy energy stocks. We're going to start things off with a company called International Seaways. They trade under the ticker INSW, currently priced just shy of $51 per share. Over the past year, they've gained 36%, including growth of 10% in the last 3 months. International Seaways is involved in the transportation of crude oil and petroleum products. They are one of the largest tanker companies worldwide, providing energy transportation for products in international flag markets. They own and operate a fleet of 77 vessels, including 13 VLCCs, 13 Suezmaxes, 5 Aframaxes, 11 LR1s, and 35 MR tankers. They'll be sharing their Q4 earnings report at the end of this month on February 29th, and this follows their last quarter where they did have an earnings beat. For their Q4, analysts are anticipating earnings per share of $2.12, and that is about half of last year's, but it would be an increase over last quarter where they reported earnings of $2.05 per share, easily beating analysts' estimates of $1.65. The company also reported net income at $98 million. And the company also declared a combined dividend of $1.25 per share, so they do pay a regular quarterly dividend as well as supplemental dividends on top of that. Just over a week ago, we did have a 5-star analyst from Jefferies increase their price target on the International Seaway stock. They noted that rising Red Sea diversions are having a significant impact on vessel capacity, which has been most felt in the container sector, but also increasingly seen across tankers. They anticipate record Q4 results from LPG players, sequentially stronger results for tankers and dry bulks, and steady earnings for LNG. International Seaways does have 5 current analyst ratings, all coming in with a buy. Their average price target comes in at $62.60, which would be an upside of 22% from current prices. Down below, looking at our most recent ratings here, we do have a lot of 5-star analysts weighing in. On the low end, we have an upside of 8% from back in November and a high-end price target of 31% coming in here. Our second strong buy energy stock is Targa Resources. They trade under the ticker TRGP and are priced at $87.81 per share. In the past year, they've grown 17.5%, including 4.7% in the last 3 months. Targa Resources is a midstream company operating in the area between the wellheads and the end customers. Midstream firms control networks of pipelines and infrastructure facilities, moving hydrocarbon products to where they're needed. Targa, one of North America's largest independent midstream operators, focuses on the movement of natural gas and natural gas liquids. Its asset networks are centered around rich production areas of Texas, New Mexico, Oklahoma, and Louisiana's Gulf Coast. The company does also pay a quarterly dividend. Currently set at 50 cents per share, that gives you a dividend yield of 2.32%, and we just passed the last ex-dividend date on January 30th. Their 4th quarter earnings report will be coming out soon, next week on February 15th, and this does follow a quarter where they fell short of earnings. For their 4th quarter, analysts will be anticipating earnings per share of $1.46, which would be a slight increase over last year's, and this follows their 3rd quarter where earnings came in at 98 cents per share, over 20 cents shy of analysts' expectations. The company did report EBITDA of $840 million, which grew 6%, and reported record NGL transportation volumes during the 3rd quarter. Over the last few weeks, we have had a handful of analysts increase their price targets on the stock, and one of those just came in yesterday from Seaport Global. They noted that while the company's near-term results could be weaker versus the consensus expectations, the longer-term free cash flow growth story remains solid, and Targa's 2024 volume and cash flow growth should be positively impacted by volume growth in the Permian Basin. Targa Resources comes in as a unanimous strong buy with 11 current analyst ratings. And the average price target of $107 would be an upside of over 22% from current prices. Down below, we can see the most recent ratings here in the last few weeks. On the low end is actually the buy rating that just came in yesterday with an upside just shy of 8%. A lot of them in those high teens to low 20% upside, with a high-end price target of 38% for Morgan Stanley. And our third unanimous strong buy energy stock is Cheniere Energy. They trade under the ticker LNG, currently priced at $159 per share. Over the past year, they've grown 5.9%, but have been falling a bit lately, down 6.9% in the last 3 months. As their stock ticker may have given away, Cheniere Energy is in the LNG, or liquid natural gas industry. They are the leading producer and exporter of liquefied natural gas in the United States and the second largest producer of LNG globally, providing a clean, secure, and affordable solution to the growing global need for natural gas. They are a full-service LNG provider with capabilities that include gas procurement and transportation, liquefaction, vessel chartering, and LNG delivery. LNG will be reporting their fourth quarter earnings on February 22nd. Where analysts will be anticipating earnings per share of $2.69. Now, this does follow an earnings beat back in November, but it does say that these earnings might not be comparable to the estimates. But along with high earnings per share, they did also report adjusted EBITDA of $1.7 billion and reconfirmed their full-year outlook. And they do also pay a quarterly dividend, currently at 43 cents per share for a dividend yield of 1.01%. Recently weighing in on the stock was one analyst from Bank of America. They commented that despite recent fluctuations in natural gas prices, they remain optimistic about the company's ability to generate significant cash flow in the coming years. They also expect a considerable ramp up in share repurchases in 2024 as the management team adjusts the balance between buybacks and debt repayment, further signaling confidence in the company's robust cash reserves. Cheniere Energy has 8 analysts, all currently rating the stock a buy. And their average price target comes in at above $203 per share for an upside potential of nearly 28%. And we do have a lot of 4- and 5-star analysts weighing in on this one. The most recent ratings here all up in the double digits, a high-end price target of over 41%, and a low-end price target of 16% upside. So that is a quick look at 3 energy stocks, all coming in with unanimous buy ratings from Wall Street and some double-digit upside potentials there. Let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. And of course, please remember that these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan and do your own research and due diligence. Thank you guys so much for watching. I hope you have a great weekend, and I'll see you back here next time.